Hey everyone, you're listening to The Momentum Project, where Rui Castillo and I, George Berger, discuss strategies to achieve momentum in finance, startups, venture capital, and always contrasting the US with emerging markets and highlighting those differences in order to give you a complete picture of what's going on in the world. If you like discussions on markets, startup ideas, and business trends, you will enjoy the show and hopefully get a ton of value from it.
3, 2, 1, 0. All engine running.
We'll talk about Facebook today. But before that, I quickly wanted to tell you about this show that I'm watching on Netflix
Okay.
called The Playlist. Have you heard of it?
No, I haven't.
Yeah, so it's amazing. It's about the Spotify story. And I really like it because it's just such an interesting TV series. It's a Swedish series. So I always feel like Northern European Netflix series are really, really good. Like there's one also from Denmark that's called Borgen, which is like kind of like a political drama. It's really, really good. Anyways, like the structure of this miniseries is just 6 episodes. It's super interesting because every chapter is from a different point of view. So like the first
Interesting.
chapter is like the founder, the second chapter is the industry. So the first chapter is the founder, second chapter is from the perspective of the industry. So like it's like the director of
Wow.
Sony Sweden,
Wow.
like telling the story. So it's just super interesting, and I think it's really, really valuable to watch that series. I think you can learn a lot from it because it kind of shows how complex entrepreneurship is. Because you don't just need to have like an innovative business model, and you don't need to make like that. There's just like so many different things that need to come together to create like a category defining company. You need to have all this convergence of different trends, and I think it's such an interesting series to look at because it's actually interesting how Spotify became such a big company because it required a lot of different things to work out. It was like a huge technological innovation. Like in the series, every time they show the player, the Spotify player, people are like surprised that you don't have to download the song, that you just like click and it starts playing. And like everyone is like super perplexed. Like now it's like we take that for granted. But I mean, you and we used to download songs when we were teenagers, right? So it's and like it's so easy to forget that these were like huge technological breakthroughs. And then there had to be also like a bunch of legal innovation, business model innovation, just the convergence of a lot of different things that had to work out. And I highly recommend it. You should definitely watch it.
You know what I
And-
found really interesting is how, I don't know if it was the We Crashed TV series. I think it's Apple TV.
Yep.
So like they kind of started this trend of having like, a TV series about these successful startups. I mean, you recommended We Crashed to me,
Yeah.
and yeah, it's crazy. I mean, it's a really good TV series.
Yeah. And obviously, I mean, WeCrash is primarily kind of paints like a negative picture, I think, of startups, like, excess and like just poor founder behavior to some extent. But I think Spotify is a little bit more inspirational.
Okay,
But like
that's
still, I
interesting.
feel like it's kind of pretty realistic. And it's
Yeah.
super interesting because like every episode, like the person who like leads the episode, like the says like, that's not what happened, like let me actually tell you what really happened, so then the
Wow.
lawyer says like, oh, like this is complete nonsense, this is what actually happened.
Wow,
You know,
that's
like,
really
so,
interesting.
yeah,
Yeah,
it's really good.
and I think that's really valuable because if we compare it to the We Crash TV series, I think We Crash has like a really clear vision or opinion of like Adam Newman, WeWork founder. So yeah, you finish the series like with this really negative view of Adam. So maybe this kind of presentation where you have like different viewpoints and different perspectives, it's much more balanced, and I think that's a really interesting way to do it. To be fair, maybe that's the way to go if you want to like present some sort of historic TV series. Like, hey, there are always going to be different points of view, and I think that's really valuable.
Yeah.
Still, George, I think that Adam Newman, WeWork's founder, like he has some tremendous like traits, like that way he's
Of
at
course.
least he's a tremendous salesperson. Like the
Yeah.
way he made inspire others to believe in WeWork, to take WeWork to such high valuations. That's mainly thanks to that ability
Yeah,
um,
of course. Of course.
to sell. So yeah,
I would say the Adam Newman and his portrayal in the Apple series in Recrashed was obviously slightly simplistic. Like I think
yeah,
they kind of portrayed him slightly dumber than he actually is, because he is quite
yes,
intelligent. If you watch some of his interviews, he comes across a little bit more nuanced in his thinking. And I think in Recrash, he was portrayed as just this kind of like super extravagant kind of founder who's a little bit out of touch with reality.
yeah,
And
like a dreamer, and yeah,
yeah, yeah, and not particularly intelligent, actually. I think that there were like a few episodes in the I think at the beginning of the series they kind of portrayed him as like being like a little bit simple-minded, and he obviously isn't. He's obviously very, very intelligent. So
yes,
yeah, anyways, the series is called The Playlist, so check it out. It's on Netflix. All right.
awesome name.
Yeah, a really, really good name. And like that was actually one of the innovations, was that Spotify allowed you to create playlists, and they monetized that particular feature. So it's super interesting.
Okay,
Like just go and watch it. It's fantastic case study
I will.
of
I'll definitely.
entrepreneurship.
So Netflix, right? This is a Netflix TV series.
Correct, correct, correct. Right. So, next topic, we wanted to talk about Facebook, and we wanted to kind of evaluate whether Facebook is a buy at the moment. And we're recording this on November 17th. So, just to paint the general picture, markets have tanked, and there's kind of like this general question right now. A lot of people are debating whether the market has bottomed out or not, whether it's a smart idea to start averaging into the market. And few weeks ago, Altimeter, who is an investor in Facebook, wrote this letter, which was called "Time to Get Fit." Was a public letter to Mark Zuckerberg and the Meta board of directors, and basically it called for a refocus of the strategy, like away from the metaverse, and basically said you need to reduce your workforce and focus. And it seems like Facebook has done that now. Has already laid off what was it, 11,000 people. So quite a big reduction in workforce, around, let's say, 9%. And
Yeah,
so and the market has responded relatively positively to this change. But I'd love you to just show us how to think about stock analysis, and how you would sort of evaluate Facebook or Meta at the moment.
awesome. So yeah, this cool. We're gonna do it like really simple today, George, just like for the sake of simplicity. But of course, this could be a really deep technical analysis. That's how it really works when like you're an institutional investor. But let's start. Let me share you. So first of all, we need to start with financial statements, which like these are basically like accounting documents. Financial statements are key for either investors, like market analysts, creditors, even like a retail small investor, because it allows us to understand how companies, in this case Meta's Facebook performance is going, right? Like numbers, financials tell us a story about how well or how bad a company is doing. And the important thing here is, George, is that financial statements and accounting and financial ratios, what we want is like the ability to compare a company and its current positions, its current performance, to either the past, to similar competitors or similar companies, or even different companies, right? So we want to make like apples versus apples comparisons. That's really really important. So we have three key financial statements. We have first the balance sheet, which is basically like a photo, right? It's a picture of how in a current moment, or in a point in time, how a company's assets compare to its liabilities and its equity or capital.
Mhm.
So basically, it tells us, okay, what a company owns and from where that assets come, right? Like, okay, at the end you have to, your total assets are equal to the liabilities plus your equity, right? So that helps us to understand, okay, how well positioned a company is, how much leverage it has, and a bunch of like financial ratios and financial information that allows us to understand how positioned is a company in a certain moment. The income statement is focuses primarily in like a company's revenues, like it's how sales are going, right, and the expenses that are directly related to sales, and others that are related to other variables. But at the end, what we want to see with the income statement is, okay, how much revenue that company is producing, and at the end, how much net income is that company having for a certain period. So if we compare the income statement, George, to a balance sheet, the balance sheet is like a snapshot, like a photo, and the income statement is more like a video of how revenue and expenses worked for a period of time for a certain company, right?
Correct. And the standard here is quarterly breakdown, right? So you can see
Yes,
how
yes,
the financial situation of a company evolved quarter, and then you have the net income, which is essentially revenue minus expenses.
that's perfect. So yeah, and finally we have the cash flow statement. So something really interesting, George, is that lots of like retail investors, or people I have spoken with, like they always focus on, oh, this is a profitable company, like they focus a lot on profit. And in reality, George, we know that there are certain companies that can be profitable, that they finish like a year with profits, but they could still face bankruptcy. And this is crazy, George, because it sounds like not logic, right? How could a company have a profit, like net income, but at the end still face bankruptcy? That's related to cash flow. So let's remember that cash flow for a company is the same, it's just as blood circulating through a human body, right? If you stop the cash flow for a company, that will kill the company, because you need cash to pay all your expenses, like salaries. It what allows you to keep going. So the cash flow statement basically says, okay, how is the free cash flow, or how is, how good is a company to produce free cash flow, to generate real cash, to pay all its like obligations, and all these expenses, fund investments. So it's really really important, because if you get a company, let's say you get a company which is profitable, but it has a lot of clients or customers are still owing money to the company. So yeah, in theory, you could have like a profit, but if you haven't been able to receive that cash, you could go bankrupt, right? So it's really really important to have a cash flow statement to understand how well a company is managing its cash, and if at the end it is having cash to pay everything that it must be paid, right?
Correct.
So
But generally, would you say that tech companies normally have that cash flow problem? I could imagine that it's normally more traditional businesses, that like maybe sell something and they're still waiting for payments to be made. Because I mean, these startups, these big tech companies, they normally sell like services or digital goods, advertisement, etc., where the cash flow seems to be immediate. So do these big tech companies also have this type of problem?
I don't think so. Like a really good example of this is Amazon. Amazon for several years they kept operating with losses, right? Like they didn't have a profit. They were so good generating cash, and that those cash flows gave like creditors or investors so much confidence about Amazon's ability to pay its liabilities, that like money, cash, kept flowing, right? So yeah, at the end, to be honest, I think it depends a lot in which company you're talking. But what we have seen for big tech, like really big tech, they are really good with generating or getting cash. So yeah, I don't
Correct.
think it's a problem with big tech. Yeah, and like you could talk about like the financial sector, like banks, like the way they are, like U.S. banks, for example, have a lot of support from the Federal Reserve, right? So yeah,
But
it's
banks might
really
have more
interesting.
problems in terms of cash flow,
Of
right?
course,
Because if someone defaults on
yes,
their credit or on their loan, etc., right?
that's right.
So, mhm.
Yeah,
That's why
yeah,
banks have
that's
more exposure, have more risk exposure in general.
basically that's like any financial business, needs to be really really careful with that, because if you have like a bank run, basically that's what happened to FTX, right, which is
Correct.
like such a hot topic right now. So yeah, they had a huge problem with the value of their collateral, and then everyone's scared, like, all investors and clients were so worried about what's going to happen with FTX that they started to take out their funds. So yeah, that's really serious for financial institutions. So continue with like other financial metrics. So we have ratios. So ratios basically allow us to compare companies like on a very simple apple to apples basis. So first we have like the book value, George, which is like it's usually based like on like an accounting valuation of a company. So it includes like equipment, buildings, land, or anything else that could be sold. And that value, it's basically what we use to divide the price of a stock to its book value, right? So generally what investors look at, the P2E ratio, is that the lower the P2E ratio, the safer it should be to invest on a company, right? It's generally how it is used. Now, the really, really famous price to earnings PE ratio is the one which is mostly used, and most investors refer to the PE ratio. Is the individual price of a stock. So you divide the total market value of a company by the number of shares, outstanding shares. So you get this price per share, like, and then you divide that by the earnings per share. Or you could just divide the total market value of a company by its total earnings.
Okay.
So
Market value equals market cap, correct? Market capitalization.
yes,
Okay.
that's correct. So yeah, like if you want to like quickly get the market cap of a company, you just need to multiply the number of shares that company has by the like the lastest price, right? The latest market price. And yeah, so on a very simple way, George, the PE ratio allows you to see how many years it will take, if you consider the earnings of a company, to buy that stock. So if you have like a PE of 10, that means that it will take you 10 years of earnings to buy the price of that share, right? Does that make sense to you?
Yep.
So, of course, if you have a really, really high PE, a really high price to earnings ratio, let's say 30 or 50 or 100 times the price of the stock compared to its earnings, that's something that you should really be worried about, because it could mean that that stock, that company, is highly, highly overvalued, right? And just imagine like a price to earnings ratio of 100 could mean like, okay, it will take me a hundred years to recover my investment. So yeah, it is really important to see it that way. And something really important, George, price to earnings is really useful, but it's not enough just to use the PE ratio. Let me give you just another quick example of
And just as a
why.
as a as a quick
Yeah,
side note, the only thing that can kind of offset that particular data point is the growth rate of the company, right? So if a company has a very very high
that's right.
growth rate, potentially the high PE ratio might be justified if the
Yes,
company is growing really really quickly, right? Because then investors
yes,
are just expecting that earnings are going to increase and that the price to earnings ratio is
that's
going to
right.
come down dramatically within the next few years.
And we're gonna see that's what happened with Facebook, because remember that the formula, it's market value divided by earnings. So some lots of times what happens, especially with high growing startups or growth companies, is that the valuation, like the market value, is so much higher than the earnings, because investors see a potential. So the key word here is, okay, this company has a really really high PE ratio. Is that because it's like some speculation and there is a bubble, right? Like there's some sort of a bubble effect with this asset, this stock, or this reflects the company's high potential to start seeing really really high earnings in the future. And if that's the case, we should see if that's a successful company and those that high earnings growth happens, okay, the PE ratio should like move closer and closer to like maybe the industry average,
Correct.
right?
And I think actually that's one of the reasons why I'm always concerned about the strategy of a company. Like when I think about
Yes.
like investment, I prefer to invest in and hold for like a few years. I'm not like a day trader or anything like that. I don't have time for that. So the uh, because ultimately you're always speculating, like you're always evaluating like the future growth potential of a company, which is why I think that yes, analyzing the financial statements is super important to understand the current position of the company. But I also think that you always need to evaluate the strategy, like where's the company heading over the next 5 years, over the next 10 years, so that you can have an idea of how earnings are going to continue to develop, right? Because
Yeah.
otherwise
Yeah.
I think that's always something really really important, that you need like a more holistic analysis. You can't it's in my opinion not sufficient to just look at a company's financials. Like you need to think about what is the company going to do over the next 5 years that is going to move the needle. Do you agree with that?
Totally. I mean that's the tricky part, George. And to be honest, I think that's where the real value is when you are analyzing a company or a stock, because we know that past performance is not an indicator of like future performance. So yeah, financials help you to understand like a lot about that company, but at the end, the future will be determined by how well that company keeps innovating, keeps like taking care of costs. And just to mention it really quickly, that's why in the previous days, Meta's stock recovered a little, because after that huge crash that they had this year, like they are like recognizing, okay, we have like maybe over invested in the metaverse. We are gonna take decisions that will help the company to continue being financially healthy, right? So yeah, financials are really really important because they tell you story. But going forward, if you want to continue being like a successful organization, you need to be understanding and analyzing where growth or where revenue will be. And I think that's, I don't know what you think about this, George, but I think that's really really tricky for tech companies, right? If you compare Meta to, let's say, Coca-Cola, right? Like, okay, they have like a very clear vision. Okay, we need to keep a large percentage of population consuming Coke, right, and soda or beverages. When you are like on a tech sector, innovation, and understanding how this highly, like really really fast changing industry is heading. So yeah, I totally
I
agree.
think that generally there's also the fact of just trends, right? Like
Yeah.
trends, not just in technological trends, but also trends, let's say psychometric trends, like a
Hmm.
change in attitude towards certain things, right? Like
Yeah.
for example, I think you mentioned the example of Coca-Cola. I think that there's a big shift towards healthier lifestyle potentially. So I think
Yes.
that's like a big challenge, right? So I think that you also need to think about like what are the current trends that are shaping our world and how they're going to affect potentially this type of company, and how good is the company position in order to potentially respond to those big macro trends that will change consumer behavior, will change how the market looks. And then I think the other point that's important is just to also think about market saturation. Where can growth come from?
Yes.
Will growth come from existing products? Will growth come from new products, etc.? And generally, I think that's where big tech has maybe some advantages, because they have innovation in their DNA, so they can always actually think about creating new products. Where I think more traditional companies are maybe challenged a little bit more. At least that's how I always think um, about like these two blocks of like you're going to invest in secure traditional companies or big tech. I think that both of them have challenges, and the context is slightly different. But I think that generally big tech is better positioned to innovate, and I think it's something that we've also seen over the last few years, that I don't know, like a new startup has like an interesting idea, and then big tech company maybe just like rolls out the similar features and captures the market share really really quickly, right?
Yeah,
So
yeah.
that's how
Microsoft is
I
a
kind
great
of,
example.
yeah,
I think
exactly.
Microsoft is
Correct, because they crushed Slack, for example, with
yes,
Microsoft Teams, right? And everyone said, "Oh, Microsoft Teams is a terrible product, etc., etc., etc." But in the end, they crushed it. So yeah, I think it kind of also depends on how quick that company can move, and
yes,
how you evaluate the quickness of that company.
yeah,
But
and I
yeah,
think this applies to like all industries, George. Like one of the worst performing stocks in terms of a sector in the last 10 years is big oil, like these huge oil companies. I mean, they had a really good year with like what's happening with commodities and inflation and Ukraine Russia war. But if you see like the stock performance of big oil in the last 10 years, terrible, right? So a lot of people assume like, okay, this is a dying industry, but we know that some of these huge companies with a lot of money, they're like starting to look into what you just said, like these mega trends, and they are like investing in renewable energies and green energies. So we don't know, maybe like what was one like these gigantic oil companies that lots of people hate, will be like the strongest renewal companies in the future. So it's really interesting to see how like dying industries or companies that seem to be like their future is really dark, they can reinvent themselves if they just spot what you just mentioned, right? So yeah, really really interesting. But of course, that for retail investors, for those who are listening to us today, if you want to invest in stocks, in particular stocks, it's really important that you go deep into understanding how that company makes money and how that industry is changing. So in that way, just as George mentioned, you could potentially identify if a company is taking steps to innovate and be involved in those changing trends. George, right here we have on the screen the historic price for the last year of Meta's Facebook
yeah. So
stock.
let's describe what we're seeing here real quick for the users. So we have a graph showing Facebook or Meta stock from last year. So over the last year, it peaked at a little bit over 300 at 338, and it's now down to approximately 100, 110. So it
Yes,
declined by, what's
two
that,
thirds. Yeah,
66%, right? So
yeah,
okay,
basically.
so that's the current situation of Meta. Moving on,
Yeah,
what do you think of Meta right now?
I think that Meta is facing like a really really interesting moment. I think they have plenty of resources, George. So I think that they will be able to come through from these really really tough times for them. So what we know is that they invested a lot of money in their metaverse project, right? That you know more a lot about that than me, but like they used a lot of cash, and we what we know this for the last year is that they have a strong decrease in their cash flow. So for example, if you think about the net income before extraordinaries for Meta 1 year ago, that net income was close to 10 billion US dollars, George.
Mhm.
For the end of last quarter, it was down to 4.4 billion, right? So that's half of what they were getting as net income a year ago. So of course that explains a lot of why the stock has dropped so dramatically, because in terms of cash flow, they have seen an important decrease. If you, for example, think about revenue, it's really interesting that there has not been such a strong decrease in revenue. Like their sales and revenue was close to 30 billion. So that's at the end of third quarter of 2021. And last quarter, at the end of the third quarter of 2022, their sales revenue was around 27 billion. So yeah, just that's just like a 2 billion difference. What happens there is that growth estimates were like strongly damaged. Like they fell short of what was expected for Meta. So yeah, what I think personally is that Meta is a really strong company. I mean, financially, it is. When you compare it to these FTX and like, these crypto startups, and you understand how leveraged they were, like Meta seems like so strong. Like,
Exactly.
yeah, it's like I mean, they have a huge market share. Like they are so dominant in their like social media platforms. They, I mean, their revenue it decreased a little, but customers are there, and I think that they will learn. And I think we have now evidence that they are trying to change plans so that they can continue growing.
Correct. It seems like they're going to adjust their strategy, move away, not move away from the metaverse, but probably reduce a little bit the investment. Not sure though.
Yes,
So I think that that's something that remains to be seen.
yes, yes.
Uh,
Yeah, I think that if you listen to like institutional investors, these huge investment funds that have a lot of power
mhm.
in Meta, that's what they want. Like first, it's okay. If we are seeing like no growth, okay, you need to quickly adapt your like your cost and financial structure so that you keep being profitable and that you keep being a financially healthy company. But then, like, you need to think about where you're going to invest money to keep growing. So you mentioned in a conversation with me, like, okay, they still have a lot of growth for Instagram, WhatsApp,
Correct that. So
Facebook in
I was
emerging
looking at
markets.
this. I was looking at this, and generally, so I'm very conflicted, uh, because I technically want them to move away from the metaverse strategy because there's one big question here whether the metaverse trend is actually going to materialize, right? Like, so I think that there's a specific world that Zuckerberg is imagining where everyone is going to wear headsets and like the Quest, they've just now released the Quest 2, and that there's like a really really big question mark for me whether that is going to materialize. Like I've played around a little bit with virtual reality and also augmented reality. I've tried out some of these headsets. There's some limits in terms of what the hardware can do in terms of processing power and having a really high resolution. So there was one problem with the Quest where you could see different screens but they would actually be blurry. Like you could you'd have like these different apps where you could like kind of like work with different screens, but the processing power actually wasn't high enough. Now apparently with the Quest 2 it's slightly better, but I think that there's like a really big question mark around that. So I'm not so sure whether the metaverse is going to be more than it is today. I think it's not such a clear trend. Also because
Yeah.
the point of entry is it's kind of expensive. I think the Quest 2 now costs 1,500. So
Well.
I think considering that it's so expensive, I don't think that you'll have like mass market adoption by consumers. I think the point of entry might be companies. So, if a company decides, wearing these headsets makes everyone in the company 10% more productive, then companies are just going to order thousands of these headsets and going to say, especially companies that are maybe working remotely are going to say, hey, everyone is going to wear these headsets. We're all going to like collaborate virtually in this virtual reality environment. Facebook is also rolling out some tools for that. The Horizon workspace that Facebook is launching, but I'm not sure if that's actually going to be the case. So I think it really, really depends if virtual reality is going to make you more productive in your work or not. And I think that that's actually a really, really big question mark for me personally. And then and let's say it does get there. Let's say the technology does get there and you do become more productive. Then there's another really, really big obstacle, which is actually selling to companies, having this B2B sales DNA in your company. And Facebook has performed horribly in the past trying to sell to B2B, right? Like Facebook had Workspace, which only had like 7 million users or something like that. Compare that to Microsoft Teams, which had 140 million. So I'm not even sure if Facebook is going to be able to dominate the B2B virtual reality space.
Yeah.
So that's something that's a little bit worrying. if you're a Facebook investor and you think that the company is like basing their entire strategy on the metaverse, I'm not sure if they're actually going to be able to manage that, having a successful point of entry to getting mass adoption. And then there's a competitor, which is Microsoft, who I've already mentioned, and
Yes.
I think are much better positioned with years of experience in selling to companies. And then there's another point of entry to the metaverse, which is just video games. Just
Yeah.
like and there Microsoft again is much better positioned because of the catalog of intellectual property that they have. They've bought all the big studios, etc. I have the numbers here. Give me a second. I'll just pull up the numbers. So Microsoft bought Minecraft a couple of years ago for $2 billion, and that has 140 million active users. They bought ZeniMax Media, which had games such as Elder Scrolls, Fallout, Doom for 7.5 billion. They bought Blizzard for 70 billion, which was basically one of the largest acquisitions in tech ever. And Blizzard has titles like Call of Duty, Warcraft, etc. So Microsoft is really, really well positioned to dominate the point of entry to the metaverse
Hmm.
via games.
Yeah.
So I think that is going to be a huge competitive advantage for Microsoft, and it's kind of a strategic danger, a strategic
Yeah.
threat to Facebook. Now, mentioning all of this, despite all of this, I kind of think that if Facebook would just focus on their core business and think about just growing their existing apps and optimizing monetization, they're really, really well positioned. So that's the other
Yeah.
point, like the other side of the coin, so to speak. So, and the interesting thing is that Facebook, the app, is actually still adding users, and there's quite limited churn. So there's this one meme that is the decline of Facebook. No one is using Facebook anymore, and that's actually not true if you're looking at the numbers. So Facebook added 16 million users, daily active users, and 24 million monthly active users over the last 12 months. They're now at 1.9 to almost 2 billion daily active users. So basically everyone on planet Earth, I mean, we're now 8 billion. Basically everyone who lives on planet Earth, almost everyone is using Facebook. So Facebook, the app, is still growing, and there's very, very limited churn. And then there's WhatsApp as well, because WhatsApp is really, really interesting because WhatsApp is growing in the US as well. So WhatsApp is already huge in any emerging market. I would say actually everywhere outside of the US. WhatsApp is the dominant messaging app. And I think
Yeah.
here US centricity can also hurt you. If you just live in the US, you never use WhatsApp, you actually don't know how the rest of the world interacts with Facebook products. Because the one Facebook or Meta product that I use every day, that everyone I know uses every single day, is WhatsApp. And they
Yes.
haven't even started monetizing WhatsApp. So if they
Yes.
start monetizing WhatsApp, that's going to be crazy revenue stream potentially. And so I
Yes.
think that that's very, very positive. And then the other interesting thing is TikTok. So because that's the other kind of trend that analysts are really, really worried about, that TikTok is going to kill Facebook. And if we've learned anything from the past, is that Facebook kills competitors. They just are really, really good at copying features. And they did this in the past. They did this with Snapchat, and everyone said Snapchat, like 5 years ago or 7 years ago, everyone said Snapchat is going to kill Facebook, and Facebook just basically rolled out copycat features and completely dominated it. And I think the same is actually happening with Facebook Reels. That's the Instagram product that is directly competing with TikTok. And it's actually really interesting if you just look at these numbers, because TikTok as a company had $4 billion in revenue in 2021, and just advertising on Reels had $3 billion
Yeah. That's crazy.
in revenue, and that's just one little product, right?
Yeah.
So
It's
okay,
wild.
maybe
Yeah.
TikTok has better growth and overall has like more minutes watched, etc., etc., etc. Yes, engagement is bigger on TikTok, but Facebook or Meta is absolutely genius at monetizing, right? So this
Yeah.
and that's actually really, really important, because Facebook, like no other company, has figured out how to monetize apps. So
Yes.
I think that that's like a really, really really interesting and really meaningful number there, just to put that into perspective. Everyone who's
Yeah.
thinking, oh, TikTok is going to kill Facebook, one little Facebook feature which is Reels inside of Instagram, is making 75% of total revenue that TikTok is generating. So
Yeah. George,
not really sure that TikTok is going to kill it. So I think that Facebook is or Meta and their family of apps are super well positioned. They just need to focus on that, and they're going to crush it. I think that they're really, really well positioned, and
yes.
they're so embedded in the daily lives of billions of people like no other company.
Hmm. That's true. Yeah, that's true.
So Facebook is a buy. Do we agree?
Yes. Just to like finish this point. Do you know when was the last time when we had access to a Meta or Facebook stock around $100? Like, that's I think yesterday it closed around 108.
No,
Like,
I've not. Well, that was maybe 6 years ago, 7 years ago.
you're right. Like 2015 price
2015,
ranges. Like,
7 years.
yeah. So what I tell a lot of people is like, hey, like if you believe in Meta, if you believe in Facebook, there are so many points for it. Like you just mentioned, this is like a time machine. Like you're going back 7 years in time, and buy and you could buy like Meta stocks or Facebook stocks in that time around $100. That's an opportunity. And if you compare like the current price to earnings ratio for the Meta stock right now is around 10. 7 years ago in 2015, it was around 80, George.
Yeah.
So yeah, so
So very healthy
uh,
ratio.
yeah, and the earnings per share in 2015 were around $1.29 per share, and right now it's around 10.5 earnings per share, right? Yeah, so I think it's really really interesting time for Meta, and my guess is that this this is probably a great time to buy the Meta
Yeah.
stock. Like
I bought
will
them. I
be
bought them
like,
last week, so I opened a small
okay.
position. Hmm.
I'll buy a few more Met stocks in the following weeks for sure.
Yeah, yeah. I think I'm now going to start averaging into that stock. Seems like it's well positioned. Just needs to focus. All right. I
Yeah,
think that's it. Or do
awesome.
you have anything else? That's it.
No, that's it.
Perfect. Wonderful. Have a good one, everyone. Bye.
See you guys.